So we've had a really interesting week in the world of global finance. The biggest event was the fact that the Swiss National Bank unpegged the Swiss franc from the euro, which caused absolute chaos in the ForEx markets and caused some hedge funds to literally go from a valuation of about $1 billion to almost nothing overnight. And basically the franc gained about 15% against the euro, 14% against the US dollar in just a matter of days after the bankers unpegged the franc from the euro after promising to keep the peg at 1.2 Swiss francs per euro. So that's why some of these hedge funds made such large bets and then suffered almost bankruptcy. Now, the interesting part of that was that people were shocked. They were shocked that the bankers lied, which is crazy because the bankers have been lying since the beginning of time. So when does a banker's promise ever mean anything? It doesn't mean anything. So these hedge fund managers that were shorting the franc, and I'm going to insert a chart so you can see that the net shorts were the greatest since 2013. Okay, so you looked at that chart and you saw why some of these hedge funds blew up, and I have zero sympathy for these hedge fund managers because why would you ever trust bankers? Because bankers have never been honest. That is their whole game. Their whole game is surrounded by deceit, lying, cheating, and stealing. So that is the big thing, which wasn't even a shock to me. It wasn't even a surprise that this happened because A, I expect bankers to lie, and B, it was merely just the timing of it that surprised me. Okay, I'm not going to say that I predicted this was going to happen, but if you watched all my videos about the Swiss gold referendum back in November, then you could see that the bankers were going to push themselves really basically into a corner, and that this was a distinct possibility of happening. So these type of financial earthquakes are going to continue to happen in 2015, and I truly believe that. So we're going to get some kind of like Lehman Brothers and Merrill Lynch type failures again soon. I don't know if it's going to happen in 2015. I think there's a good possibility it may. But it may be extended out to 2016. But all I know is the fact that when the bankers kick the can down the road, the can of responsibility, and continue to act in a totally irresponsible, sociopathic manner, that is going to cause a lot of problems, and a lot more of these shocks are going to happen. So what can you best do to protect yourself? And that, of course, is be prepared for these events before they happen. And I think gold and silver ownership is one of the best ways to do that. Now, interestingly enough, at the end of last year, in some of my free newsletters, just look at the link here, subscribe below. You can subscribe by going to my website at www.smartknowledgeu.com and sign up for the free newsletter. At the end of last year, when gold and silver was so low, and I told people it's a good time to buy, people for some reason never want to buy when it's low. They only buy when they see prices rising. And of course, that's mostly in the West and the EU, because look at this picture. That was a picture just last week. I was in a gold store in Bangkok, in downtown Chinatown, and there's masses of people buying gold at these prices because I know it's a huge sale. And you know, they bought actually before gold spiked. They bought, luckily, before the Swiss franc thing happened. But I said again, if you prepare beforehand, because gold and silver have been having solid years. You know, in our subscription newsletter, a lot of our stocks are now 14, 15, 16%. And we have a number of stocks up that amount. And then in our platinum membership, in which I told our members they should be looking at buying some junior miners back in around mid-December, some of those stocks actually have a double and are up like 85% and 45% and 50%. I don't understand why people don't buy low, because I think a lot of it's due to the banker propaganda. But what's going on here? The other interesting thing that's going on is before I move on, getting back to the point of financial earthquakes, I think there is a possibility that you're going to see a big global European or American bank fail at some point this year, because the thing that a lot of these bankers are doing now, they're shooting themselves in the foot. So they wanted to, you know, John Kerry went to go meet with the Saudis, and obviously they cut some kind of deal to keep driving the price of oil down to hurt Russia. Again, that's speculation, but it's a pretty good, solid speculation that the reason oil prices were driven so low was to try to hurt Russia, whose economy depends a lot upon solid, good oil prices. Because there's the currency wars, which you can't separate from the geopolitical wars. So the currency wars really are the same as the geopolitical wars between Russia and China and the West and United States and NATO nations. And they wanted to punish Putin, but in the process, because so many big banks income and revenues depend upon oil companies, the revenues are going to go down. And not only that, when we look at the derivatives market, which just a couple of years ago was $1 quadrillion, that a lot of the derivatives exposure now is at absolute risk at some of these big banks. If a big bank fails, it's going to cause a domino effect. It's just not going to be, just like in 2008 when Bear Stearns collapsed, then Merrill Lynch collapsed, then Lehman Brothers collapsed. So you're not going to just get one big bank failure. You have a possibility of one big bank failing and then causing a whole kind of tremor through their global financial system. So you definitely see that. Now, when you look at it, it's ludicrous that there's still these banking shills and trolls out there that say there's no proof gold and silver prices are manipulated, because that's ridiculous. If you go to, look, I'm just going to click on the JM Bullion, which is a big bullion dealer site, and look at the price of American Silver Eagle coins. Now, if you look at I started my business in 2006, so let's go back and you look at some MS69 rated, which means certified Silver Eagle coins from 2006 are at $33.64 per coin, which is 1 ounce. So that's a 83% premium over the spot price. And people say, wow, these premiums are so high. It's not high. It's the fact that the spot prices are fake prices. They're fake prices set by this criminal banking RICO cartel that is using these prices to basically, using the paper market to create reverse alchemy, to create gold and silver paper ounces that don't exist to drive the price down. So a lot of people, when they only check the spot price, when they see that price going across that little ticker, when they watch the mainstream financial media, think that's the real price of real gold and real silver. And it is not. It is not. Because looking at let's go to even recent American Silver Eagle coins. You look at 2002 American Silver Eagle coin. It's not even MS69 rated. So this is just like loose coins. Those are still selling at $23. In 2008, $22.93. And I'm just looking at the JM Bullion website. So why are these ounces much higher than the spot price of $18? It's because that spot price is fake. The same thing for gold. The spot price is fake. So people must take caution now. People think too that, oh, look how great the US stock market is. That is entirely rubbish too, because they only present to you like this 3 or 4 year window in which they jacked the market up on steroids, and it's all artificially created, whereas there's no organic growth, there's no organic earnings from most of the components of the S&P 500 and the Dow Jones that would justify the market going back up. But if you look over a longer period of 7 or 8 years, the gains are minimal. And if you adjust it for true inflation, not the bogus inflation numbers that governments put out, but true inflation, then you basically have no gains. But as a warning, even looking at the US stock market, which there's no stability, it's up 600 points. The S&P 500, that's down 600 points, then it's up 800 points, down 800 points. It's just ridiculous. The volatility shows that it's very unstable, and people should have a lot of caution in what they wish for. A lot of people are wishing for this melt up, blow off top in the S&P 500. But if you look at Venezuela, if you look at Zimbabwe, had the best performing stock market in the entire world in terms of nominal terms. Because I already told you, nominal terms don't mean much when a currency is really devaluing and purchasing power. So Zimbabwe had the best performing stock market in 2007, but it was only because it cost $1 billion Zimbabwe dollars to buy dinner in Zimbabwe, and then it went up to, I don't know, I know you had $1 trillion Zimbabwe dollar note. So it's crazy. And in Venezuela too, stock market's gone up 8 times in the past 2 years, almost doubled in the last few months of last year. So why are people saying, oh my God, look at the lost opportunity in Venezuelan stock market, but look at some of these pictures. The 2 pictures you saw, the first 2 pictures of the supermarkets being empty, is just because prices are rising so rapidly. As of last August, there was 60% annual inflation in Venezuela. So that double in the stock market basically meant nothing in terms of any real wealth. And if a melt-up top comes and blow-off top happens before a crash in the U.S. stock market, that melt-up, blow-off top is not going to mean a damn thing to anyone in terms of real wealth. Because just like in Venezuela, it's only going to come on the back of a plummeting U.S. dollar, and prices are going to go sky high. So I imagine that people are stocking up on food and buying food when they can, and that's why a lot of the shelves are empty before prices keep going up. You know, just like post-World War I Germany, when people asked to be paid 3 times a day because food inflation was so high that by the time they got home from work in the evening, that prices might have doubled from just the morning. So they would ask to get paid in the morning so they can go and buy some essential goods to survive. Then, as ludicrous as it sounds, it was true. Then they asked to be paid again in the afternoon so they could go out on their lunch break and go buy essential goods to survive. And then they asked to be paid again before they left work, because that's how bad inflation was in Germany during the Weimar Republic. And you know, if you get a melt-up, blow-off top in the U.S. stock market, people really should be a lot more sage in what they wish for, because that can only happen on a plummeting U.S. dollar valuation. So in the last picture I showed you of Venezuela, that was just a long line where people have to wait hours in line at a government-sanctioned grocery store that actually has some food for them to buy. So there are going to be many more financial earthquakes in 2015, so I urge everyone to prepare. It doesn't mean that there's not going to be any volatility. You know, in gold and silver, it's not going to just go up in a straight linear projection out as far as price. So I do expect volatility to come ahead. And there is going to be volatility until Russia and China and the BRICS nations really shore up everything they need to do as far as all the infrastructure for international trade, and then they can really step in and support gold and silver prices. Because just like I said, with the banks shooting themselves in the foot by driving the price of oil down just to try to hurt Russia, they have hurt themselves by driving the price of gold and silver down, because they're losing their physical gold. So they can say all they want that's a fake, you know, set the fake price, but the reality is physical gold, physical silver supplies are going to be in shortage and are going to be a lot more difficult to buy, and are going to be a lot higher than this fake spot price, as long as the Western bankers control the fake spot price. Okay, thanks a lot for watching. As always, stay intensely curious. Until next time, so long.